organizations will be thinking about just the direct cost, but they don't realize that that's really the cost that they're thinking of. The other part is the indirect cost. And so when you are factoring in what your true cost of service is, you want to make sure that you're factoring in your indirect cost plus your direct cost. So your indirect costs are going to be the costs that it takes to actually support that department or that program or that service. And so support costs, indirect costs, overhead, admin, they're all kind of the same type of cost. Some organizations use them interchangeably different. And so an indirect cost, also known as overhead or admin costs, are going to be costs that it takes to actually support that department or program or service that is being carried out. So if you think about your finance, right? So finance is going to be paying all of your bills, and they're going to be processing your payroll. And then you have HR, where they're going to be hiring all of the people for that particular department or that program or that service. You have your IT costs. So the IT people to set up all your emails and any type of laptops or computers that the staff will actually need to be able to carry out that grant award or that service or that department or program. And so when you understand what your indirect costs are, and you can ensure that that's factored into your budget when you're actually going and seeking out grant funding, then you have a better picture, a whole inclusive picture as it pertains to how much is it actually going to cost us to carry out this grant award. So those are just some examples of what indirect costs are. It's going to be like your finance costs, your IT, HR, things like that.
Awesome. Thank you so much. Yeah, I think, one of the things we always talk about is like that grant funding isn't free. It's like everyone's like, "Ooh, free money." It's like, it's not free money. There's an opportunity cost, but then there's also these indirect costs that organizations incur. I know that also, and maybe you can correct me if I'm wrong, but sometimes you'll have like people will be including some like project management or managerial stuff from like a CEO or other things like that in these indirect costs. So I know there's different methodologies to approaching this and to figuring out what those costs are, and there's different things that are allowed and are not allowed. Maybe you can explain a bit around like just what kind of framework should people be using to understand what their indirect costs might be? Because I assume that this is, I know that this should be part of the calculus when you're thinking about a grant award, if it's, worth it, if it's actually going to be useful, because I know personally of projects where they got the grant and it ended up like costing them money, right? Like it didn't help them at all. It was just like this big financial drag. So what kind of tools are out there to help predict these costs, or any frameworks you might suggest for managing that process of deciding before you get the grant, ideally?
This is a great question, and a question that I always like to educate people on as it pertains to, so if you're looking for grant funding, or if you have grant funding, how do we best manage it? How do we best identify what is our true cost of service, right? Well, I actually used to be an auditor for the state of California, and I would audit cities and counties throughout the state for compliance of their grant funding. And so through that process, that's actually what stemmed me into going and starting my own consulting firm. There was a lack of knowledge and education as it pertains to, how do we best be proactive, right? It's one thing to be reactive and you're trying to establish all these systems and processes when you've already been receiving the funds. However, once you've been locked into that grant, they're not going to be like, okay, here's some extra money to cover your costs that you forgot that you needed, right? And so there are situations where you can ask for additional funding depending on, the revenues and the funding source that they have available. But more than likely, once you get awarded a contract, you have to use what has been awarded to you. And so this is actually something that when I started my consulting firm, why I was super passionate about providing this service is, because I'm seeing all of this, right? I'm an auditor. I see all of the inefficiencies, all of the waste and abuse of funding in California, especially. And so I wanted to be able to educate and provide solutions before organizations take on all of this money. And so organizations, some of the ways that the organizations can best be prepared and identify, okay, is this grant even a good grant, is through a means of developing a cost allocation plan. And so a cost allocation plan is actually a method and a tool to be able to identify what is your indirect cost as it pertains to your organization. And so there's a series of different reports and steps that you take to be able to create a robust cost allocation plan. As you are developing this plan, you can then better identify what is your indirect costs. And so this plan will identify what your indirect costs are. And then the next step would be, okay, well, now that we know what our total indirect costs are, let's develop a rate. So the rate allows you to recover indirect costs on your grants. So a cost allocation plan won't just allow you to be able to do that. You have to do the extra step of creating an actual indirect cost rate. And so that rate, per the federal guidelines, 2 CFR 200, will allow you to claim indirect costs on the grants that you're actually being awarded for. And so if you imagine, okay, I'm looking for $1 million grant, or I need $1 million. Okay, so you're going and you're looking for $1 million grant, depending on what type of service that you're needing that $1 million for. And if you know that your indirect rate is, say, 50%, 30%, well, you can ensure that that $1 million allows you to be able to recover your indirect costs associated with that particular grant. Now, could you imagine that if you went into a grant, or you're looking at a grant award and you didn't know that you were leaving 30% or 50% of your support costs or your indirect costs on the table, and you go and you take that $1 million grant, you're going to be losing out on $300,000, $500,000 on that grant. So in the scenario you were just talking about, where you know of organizations where it actually costs them more to carry out that grant, this is exactly what happens, is that organizations don't know their indirect cost rate, let alone their indirect costs. And so when they go after that $1 million grant, or whatever the grant amount is, they're leaving that portion on the table. And so ways that you can do that is to develop a cost allocation plan, in addition to having a federally negotiated indirect cost rate. And to develop that, there's a lot of different ways that you can develop that. There's a lot of simplified methods that can be accomplished. But those would basically be the two tools that you can use to be able to identify and calculate your indirect costs, so that you know how to best budget for the grants that you're actually taking on.
Awesome. Thank you so much. That's super insightful. So all those methodologies and different approaches, I think, feed well into kind of the next thing that I wanted to discuss. But from a high level, as you're talking about cost allocation plans and that kind of thing, is it a best practice to just go ahead and find a consultant to do that? Are there templates and other resources? Is this something that one thing we run into a lot is that, your general sort of CPA or CFO might not know this space. So any thoughts on, obviously your firm probably does this, but any thoughts on resources, just in terms of do you hire someone? Is it something you should try to figure out on your own?
This is also a really great question. So because there's no schooling that people can go and learn this stuff, right? Like CPA, there's an actual CPA exam that you take to be able to do CPA stuff, like accounting and, file tax forms and sign off on financial statements. In the grant space, there's not really, other than if you got your certified grants management specialist, but even within that, it doesn't teach you how to actually create a cost allocation plan. It doesn't teach you how to create an indirect cost rate proposal. And so what I have found, especially being in this space for over 15 years now, and as a previous auditor, there are consulting firms out there that actually prepare this data for clients. I found that it is more common that organizations are hiring consultants to actually prepare this, because it's only done once a year. Some organizations might do their cost allocation plan multiple times. So for example, the city of LA and even LA County, they have a whole department, but they have the resources and the funds to actually have a whole cost allocation department, right? Some organizations might not have those type of resources to have a dedicated department just to do that, but they also manage it and track it on a more frequent basis, like a quarterly basis. And so Some organizations, depending on the complexity of the organization, as well as the size and the resources, they might have it in-house. However, even those organizations that do it in-house, they end up still hiring a consultant, because the consultants tend to be subject matter experts in this space. And so for me, for example, because of my background of auditing all of this stuff, so I actually used to audit cost plans and indirect cost rate proposals, so I understand the full life cycle as it pertains to what do the auditors even look for, making sure that once the data is actually prepared, that it's prepared in compliance with the federal regulations. And so I'm always having to prepare everything in accordance with the federal regulations. And so wanting to make sure that whoever you're working with understands the regulations, what is and is not allowable, but then also because I understand the regulations, and you also want to make sure that they understand the regulations, is how can we best maximize our funds? So it's one thing to stay in compliance, but it's another thing to stay in compliance and then also maximize your funding, right? And so because I understand that, I know the different golden nuggets to use and to leverage for the clients to be able to maximize their dollars. And so obviously, organizations can bring this in-house and do it. There's a lot of resources out there. The Department of Interior actually has like a general, it's not like a full-on cost plan, but it's like an indirect cost rate proposal on a simplified method. There's 3 different ways to actually create a cost plan and even an indirect cost rate proposal. There's the simplified, direct, and then a multi-allocation method to be able to do this. The simple and the direct is obviously going to be very simple and direct, no pun intended, but it's not as robust as if you had a multi-allocation method, cost allocation plan, and indirect cost rate proposal. So there are different resources out there and templates that some federal agencies have available that organizations can implement internally, but I have seen historically that more organizations, even though they have the resources, will tend to hire a consultant to prepare this.
Awesome. Very cool. So any examples you could give real quick of like some strategies to, really like leverage that process?
Yes, that's a great question. So one of the aspects is match costs. So like most organizations know, you have to have a certain percent. Typically, most grants require a certain level of match, whether it's 10%, 15%, 20%, you have some level of match that's involved. And usually what organizations are doing when they have to meet a match is that they're tapping into their unrestricted funding. Unrestricted funding, as we all know, is like gold to organizations because they can leverage those dollars however they see fit, rather than restricted funding is obviously for a specific purpose or goal or, whatever the case may be. And so what happens is that organizations tend to tap into these unrestricted funding, where if you understand the regulations, you can actually leverage your federally negotiated indirect cost rates as a source of a match. And so let's just say, for example, your federally negotiated indirect cost rate is 30%. And so you have a grant that requires a 10% match. Well, of the 30% indirect cost rate, you can leverage 10% of that as a match. So now that frees up your unrestricted dollars to be able to use elsewhere, because now you're leveraging your indirect cost rate as a source of a match. That still leaves 20% that you can recover of indirect costs associated with that grant. So that's one way that you can definitely leverage having a federally negotiated indirect cost rate, is being able to leverage it towards your match, which then in turn frees up a lot of those other dollars that you would have had to have allocated towards that grant as a match. Also, I wanted to just mention that is something that you would have to get pre-approved. And so again, this is really good to know beforehand, so you're proactive, so that when you are going and you're seeking out that grant, these are questions that you can be asking that funding agency in terms of, well, will you allow federally negotiated indirect cost rate as leverage towards your match costs? A lot of times you might have to educate the well, it might not always be federal agency, it might be a state and local government agency, but a lot of times I have found I'm having to educate the funding agency as it pertains to the regulations so that they know that this is actually allowable. So it's always helpful to cite the regulations to the funder so that they also know that you're not just making things up. And so match costs, and then also one of the biggest opportunities, and this is something that I'm working with a lot of clientele right now, is being able to go into the organization and pull down funding that has been left on the table. This is very common for organizations that receive a lot of grant funding. And so let's just say you're the city of Sedale, and you have been awarded $100 million and you've only been able to spend 70 million. I'm just throwing numbers out there, right? You can just correlate it to however your organization is. You've only been able to spend 70 million of it. Well, you still have 30 million that's left on the table because you don't really know how to best leverage it. You've already spent the direct costs, but you haven't tapped into any of your indirect costs. Well, in this scenario, if you develop an indirect cost rate proposal, you have a federally negotiated indirect cost rate, you can actually leverage that rate and tap into the remaining $30 million that's sitting on the table. So let's just say of that 30 million that's sitting on the table, your indirect cost rate is say 50%. Well, you would be able to pull down 50% of that 30 million, which is 15 million, that you'd be able to pull back into your organization and leverage those however you deem appropriate. So it does not have to be funds. These funds do not have to be spent on that particular award. Once you pull them down as an indirect cost, it's no longer considered, they're considered non-federal funds, which means you can use those for operational purposes, which is extremely beneficial for these organizations to be able to pull that money down, bring it back into their organization, thus into the services and the communities that they serve. This is super helpful because you can actually go back 2 fiscal years and do this. So there's
awesome.
You can leverage the regulations and the indirect cost rate proposal.
Very cool. That's super interesting. I love that you brought up, oftentimes you're ending up having to potentially educate and work with your funder. It's something that we talk about a lot is just the importance of developing a good relationship with your agency and with the funders, and realizing that they are also people just trying to get their jobs done. And they may not have this kind of like deep understanding because that's not really their job. They're just there to administer the program and make sure the boxes are getting checked. And so giving them the tools they need to, empower you or, execute on the strategy that you're outlining here is super important. So just, once again, highly recommend, diving into that. So we talked a little bit about cost allocation models and resources and consultants there, and kind of optimizing around that process with indirect cost rates. I wonder if you could give like some high level, and obviously you don't have to share any names, but like high level, what kinds of how much money are you talking about with this in regards to like how important is this, right? Or like, are you saving $10 or are you like saving 100 grand? Would love to hear your thoughts on just some of the scale of like the kind of money you're enabling by, paying close attention to this.
Yeah, this is a great question. And so everyone that's listening right now pays taxes, everyone. Whether it's federal taxes, state taxes, gas tax, sales tax, everyone's paying taxes. All of these taxpayer dollars funnel back up to the government, right? And then it gets reappropriated down. Well, if we are taking on these grant dollars, i.e. taxpayer dollars, it's always going to be advantageous to utilize that funding as you're getting that funding. And so when there's dollars, a lot of dollars, and actually statistically, there's hundreds of millions of dollars across the US in a lot of different municipalities and state and local government, where they leave hundreds of millions of dollars on the table every single year, every year. Like that's just insane to me. And it's because they just don't know how to best manage the funding. And so this is where educating yourself and making sure that you understand the regulations and the implications of not spending those grant funded dollars, whether you're spending it or you're sending it back to the federal government. And I know there's this whole ordeal of, well, if I don't spend it, I'm not going to get it. Well, if you don't need it, then give it back so that like it can be reappropriated. Again, this is me going into my auditing, mindset, just because I was an auditor before. And so when those dollars are not being fully utilized, so let's just say those grant funds were just sitting there for the past 2 years, that burden actually gets pushed back onto all of us. as taxpayers. And so it's critical that organizations leverage their funding, they look at their grant portfolio, do an assessment to make sure, where are we at, right? As an organization, financially, where are we at? And so I have dealt with many organizations across the US, a very large organization here in the state of California, particular county, just with one department, their Department of Transportation, we were able to identify over $100 million worth of grant funds that has been left on the table with just one department. Now that's like literally just one department. That's like not their health department. That's not their education department, police, fire. So could you imagine that if there was an analysis done on all the cities and counties throughout the state, the nonprofits, the universities, all these organizations that receive a lot of grant funding, if all of that's being left on the table, think about the impact that isn't being able to be made when those dollars are just sitting there. So homelessness, poverty, lack of education, lack of healthcare, there's so many aspects to why this is extremely critical that we best leverage and manage our taxpayer dollars appropriately. And so by creating just these simple plans of a cost allocation plan and an indirect cost rate proposal, you can really further impact your communities on a scale that you didn't even realize would be possible.
Awesome. No, that's amazing. And the scope is pretty staggering. I know that we have often looked at this from a little bit of a different lens, but a bit of why we started OpenGrants is actually because of these inefficiencies within the ecosystem, including indirect costs, where folks simply were just not leveraging and creating the impact they could with the capital that they had access to, and it continues to be a struggle. And it's not a judgment on the government in any sense, but it's a confusing system, and they do their best, generally speaking. But it's on us to learn how to leverage and utilize and bring utility to this space, which is why I love the work you're doing, and I think it's so important. So we've kind of gone through the kind of like top level stuff. We've discussed some examples. I'd love to hear your thoughts on just kind of the time and energy it takes to get some of this stuff done. So for folks who are considering engaging someone like yourself or building a cost allocation plan, is this something that you can do in like a weekend? Is it, what kind of time from like a hours standpoint, maybe, and also what kind of investment should they think about making for outside services to come in and potentially do this kind of activity for them?
Yeah, that's a great question. So there would be, depending on your level of knowledge as it pertains to developing a cost allocation plan and an indirect cost rate proposal, there might be a learning curve, right? I've been in this space for 15 years, so I don't really have to think about it. And so, to compare, I'm going to give two different comparisons, right? So if you were to do this in-house and you didn't really have a lot of knowledge, you could search on the internet, right, of cost allocation plans or DOI, indirect cost rate proposal. You can go on the OMB 2 CFR 200. There's a lot of different resources like the National Grants Management Association. So there's a lot of different outlets and avenues that you can kind of get some resources and bring it in-house without having to hire a consultant. But if you were to do a very simple, basic plan, you could do it in probably a week. Like if you wanted to. That's if you have all of the data and you were dedicated to sit there for a week and like really focus and do it. And it might take someone, 3 months to do it. So we have clients where if we are gathering all of the data, if we have all of the information, we can actually get it done within a month, maybe even sooner, depending on the complexity of the organization. But some organizations take about 3 months, and that's just because it's done only on an annual basis. So if you kind of set around the time, and it's no different than like when you're scheduling to do your budgets, right? You do that on an annual basis. Most organizations do it on an annual basis. Some might do it on a quarterly, like they're, reassessing it on a quarterly basis. But this stuff is only done on an annual basis. It only has to be submitted on an annual basis. And so it could take anywhere from a month to 3 months to actually do. And so the investment, it obviously depends on the company that you're working with. if you are going to hire a consultant to do this. I've seen anywhere from, 20,000 to 50,000. It just kind of depends on their expertise and the added value that they provide to the organization.
Awesome. All right, very cool. Well, I'm gonna grab a couple of the questions here. One of them is, can you estimate, and I do want to extend an invitation to the audience, please feel free to drop in additional questions, but I saw one here that I think is super relevant and interesting. So the question is, can you estimate to what extent funders are willing to cover indirect costs or general operating costs? And this person mentions that traditionally they haven't, which I'm not sure what context this is coming in, but yeah, I think it's a good question and kind of relevant to what we're talking about right now.
Yeah, this is a great question. So actually with the CARES funds, so if any organization, and there was so many people that got CARES funds, ARPA funds, those funds actually allow for 100% reimbursement of your indirect costs. So I'm glad that we're having this discussion because, as we all know, almost every single city, county, nonprofits got it, tribal governments got them, got that funding. And so it's super important that if they don't already have a cost allocation plan or indirect cost rate proposal, that they get that prepared and negotiated so that they can take 100% of their indirect costs and get reimbursed for that, for those funding or from that particular funding source. And so there is a transition in terms of the OMB and the 2 CFR 200. And actually the 2 CFR 200 was established to take 8 different circulars and combine them into one so that all the organizations like nonprofits, tribes, hospitals, et cetera, can benefit, and they're under the same guidelines as state and local government has been. And so this is why, if you understand what your costs are before you even go after a funder for grant funding, if you know that this funding agency tends to not allow for the reimbursement of indirect costs, then that should be an aspect that you'll want to take in consideration is to, well, okay, do we want to work with this funder, or are there other grant opportunities that we can get to cover the costs that we're seeking? And so there is that shift in terms of funding agencies that are allowing the reimbursement of indirect costs more and more, because the federal guidelines says that these funding agencies should be and must reimburse organizations their true cost of service. Obviously, getting everyone on the same page is that's still in the works, but this is where, if you understand the regulations, you can leverage it when you are doing your negotiations or even looking for your grant funding. Yeah,
no, and it's a great point. It's something that we, know that we should include, for example, the costs of grant management and those kinds of like supporting roles for any given project. And so I think, this is part and parcel of, the core part of what we are here at OpenGrants to do is like make this super easy. And a lot of this is just, not only getting to know your funder, but unfortunately also like getting very familiar with the federal regulations around this, because as mentioned earlier, it's not necessarily the contracting person or like your grant manager at the agency's job to know this stuff. And they're humans too, and so they also have gaps in their knowledge. And so if you're in the business of getting grant funding, particularly for like governments and nonprofits who use it as just a regular stream, right, of money, this is a huge opportunity. As you mentioned earlier, Aleisha, it's like 100, millions and millions of dollars literally that you could be leaving on the table by not addressing this. And at the end of the day, it turns into an opportunity for you to ensure that you're also not like losing money on a contract that ultimately is, frequently can be pretty costly to manage. So yeah, thank you so much for that. Another kind of follow-up question, and maybe you could talk about this, but just a question of like which funding agencies provide 100% reimbursement for indirect costs. And I'll just mention that this is also something that you might want to review. It's frequently whoever develops the RFP will cite eligible costs. And the unfortunate thing is they may just cite the CFR, which is the federal regulations, instead of actually telling you what it is, but then you got to go look it up. So I don't know if you could speak to that a little bit, Aleisha, maybe on just like in terms of how to best like scan for this within maybe your grant funding that you're looking at.
Yeah. So one of the agencies that I was just mentioning was actually the U.S. Department of Treasury. So they were the ones that actually allocated out the ARPA and the CARES funds. And so with those funds, they're actually allowing 100% of cost reimbursements. There are some organizations that, and I keep saying organizations, there are some agencies that are more prone to reimbursing you your true cost of service. And those are going to be departments like the U.S. Health and Human Services, the Department of Transportation, the Department of Interior, HUD, depending on the type of grants that you have. I'm just kind of giving you ideas of the type of agencies that are more commonly pro reimbursement of indirect costs. So Department of Interior, Department of Labor, Department of Transportation, U.S. Treasury. So those are, and then Health and Human Services, those are pretty common ones that will definitely get your full reimbursement of indirect costs.
Awesome. And yeah, just to tag along on that, for everyone listening who's like, all right, well, which agencies cover this? It does come down to the actual like RFP and how they're interested in contracting. And so you'll even find within agencies that there's some places that specifically don't allow it. There's some places that do. And like, it just like can depend on the program and how the money got there. And there's a lot of other things that go into it. So one thing I will say is that you want to, obviously read that RFP really closely. Generally speaking, it will say in like the request for proposals, like what is eligible and what is not for reimbursement. And the other cool thing about this, though, is it does give you an opportunity if there is any vagueness there. One of the things that we always encourage folks to do is to build that relationship. And during the public comment periods, you can, and questions periods, you can reach out to the agency and to the team that's putting the money out there and say, hey, we want to know about, if you reimburse indirect costs and to what extent, because there are different approaches to that. And it does vary by agency and agency. So definitely be aware of that and just realize that you'll want to dig in and get those clarifications on the way in. Great question here. Are we talking about federal and state money or also private foundation money when it comes to indirect costs? And I know, Aleisha, we've been mostly talking from the federal and government grant side of things. But I would love to hear your thoughts if you've had any experience or come across, foundations who have different approaches here.
Yeah, so this is also a really great question. Again, like you were alluding to earlier about the request for proposal, right? So some foundations, some organizations might not even require much grant management, meaning like they're happy to just give you a grant award and then you don't have to report on those dollars. In some situations like that, right, like you're usually applying for a grant that's already capped at a certain amount. And so in that scenario, again, this is where if you're only relying on one, and I don't encourage this, but if you're only relying on one revenue source, then you might be limited with what you have, right? And so if you're only going after foundations and they don't really operate the same in terms of like, indirect cost, direct cost, like the government does, then you would just have to know from a strategic perspective of, okay, we might just be going after this foundation for our direct costs, but maybe we need to find other avenues to be able to recover our indirect costs. And so I'm not saying that you have to just look for just one agency to cover the whole indirect plus direct, but it allows you to identify from a strategic perspective how you should best move forward in terms of being able to get fully reimbursed for your cost of service. And so it's not, I don't want to say it's not doesn't happen, but it's not as common for foundations and those type of organizations to reimburse you for your indirect costs, I guess you should say. But again, this is all information to help you be more strategic with where you're headed financially for your organization, so you can not only be most optimal, like optimize your funds, but also maximize those funds as well.
Yes, 100%. And I'll just echo that. There's a really great question here. Can you secure a federal indirect cost rate passively if you collaborated with a local government partner for a grant award and it included an indirect cost rate?
Yes. So I just want to make sure, can you secure, because I'm a visual person too, can you secure a federal indirect cost rate passively if you collaborated with a local government? Okay. So in this scenario, if I understand it correctly, there's been federal funds that has been passed down to a state and local government, and then that state and local government contracted with you to provide a service. In that scenario, if this pass-through entity is your largest funder, then that would be the agency that you would actually do the negotiation with. If you have a different agency who's your largest funder, then that would be the agency that you would negotiate that indirect cost rate for. But the pass-through, it per the federal regulations, and it's 2 CFR 200.332, where it identifies the responsibilities of a pass-through entity and what they're obligated to do. So if that pass-through entity is your largest funding agency, then that would be the agency that you would do the negotiation with, not the actual federal government, if that clarifies that question, if I'm understanding it correctly.
Yeah, I think so. And maybe you could just touch on kind of, because I know when you like register in SAM, it asks you if you have these cost rates pre-negotiated, those kinds of things. Can you talk a little bit about what that process looks like and what that is, of like, how do you negotiate like that indirect cost rate with the federal government?
Yeah, absolutely. So typically there's two steps, well, two prior steps before you actually submit it for negotiations, but this is an either or. I do both because it's hard to understand what your cost to serve it, your indirect costs are, without actually developing a cost allocation plan. So the ideal way is to develop a cost allocation plan. Then you will create an indirect cost rate proposal. An indirect cost rate proposal is just a proposal of costs that you've identified to say, okay, this is what our rate is. But to establish an indirect cost rate is just your indirect cost divided by your direct costs. That's really it. And so once you have that package together, so let's just say that a U.S. Health and Human Services is our largest funder. Well, the U.S. Department of Health and Human Services is going to have a checklist of the various items that you'll need for submission of your indirect cost rate proposal to be reviewed and approved. And so once you gather all of that documentation, there is a contact email or department that will be identified typically. Sometimes you have to search for this, but typically it'll be identified as to who is the contact person that you need to submit this data to for review. Once it's submitted for review, this is why it's about 3 to 6 months for them to actually negotiations. But it could take about 3 to 6 months for them to actually have you have them review your information and do all of the questioning and the auditing of your submission, and then go through the approval part. Some organizations move a lot quicker, but it could be about 3 to 6 months for that process. But once you have submitted all of your data, they will likely come back, because this happens almost all the time, and they'll ask additional questions as to, okay, what are these costs? Can you give me more information? So there is that back and forth with that agency that's reviewing and approving and negotiating the indirect cost rate with you. And so it's about 3 to 6 months process for that.
Awesome. That's great to know. Another good question here. Is there a direct cost rate upper limit? If it varies by agency, is there a general range?
No, there's no direct cost rate. Like, we don't create a direct cost rate. It would be an indirect cost rate. Right. And I'm not entirely sure what that means, but there is no limit. So for example, when I was auditing the city and county of San Francisco, their Department of Transportation rates were like 121%. So I with organizations that are like, 23%. So it's all relative to that particular agency. Just because it's 121% does not mean that that they spend a lot of time with admin. No, it's just because of their costs. And it was all appropriate. So a high indirect rate, low indirect rate doesn't really matter. And that is a huge misconception, especially like if you're a nonprofit and you're looking for funding and they are very big on like, oh, well, you have too much overhead. That's not an accurate reflection of what's really happening.
Yeah, thank you for that. I think, one thing I'll throw out there too is that, frequently, I think there's a misconception with grant seeking in general activities that you're somehow beholden to some cost structure that the government has. And in reality, most of the time, you're defining all of that with, all the things you talked about, your cost allocation plan, you're submitting the budget, like you are the one who's proposing it. So at the end of the day, you're the one, putting those limits in place for yourself and constructing that narrative. And, ideally, you're, closely aligning those incentives and outcomes so that you are successful. But if not, that can be a reason that they push back on those things. But it is, this is on you really to define and, at the end of the day, just being honest and upfront about what your costs are and what needs to go into it to make the project successful is going to get you a lot farther than trying to hit some imaginary number that you think they might like. Because, apart from the things that they have defined, like the hard stops of like, oh, we want to make awards of $1 million a piece or what have you. Apart from those, stipulations, you're as a grant seeker, you are defining all of this. And so making sure you're doing it thoughtfully and in a very intentional way and not leaving money on the table is a big part of being successful in this space. So thank you so much. This is really a great insight there.
Can I real quick?
Go ahead.
So you're making such valid points regarding that. And what organizations do, so like think about a business like a grocery store, for example. Let's just say that, well, everyone wants, maybe a grocery store is not a good example. I'm trying to think of a good example, like even my services, right? Like if a lot of people were like, oh, Aleisha, like I don't want to pay you for that service. Well, there's plenty of other people that will. And so I'm not going to reduce my price just because people are like, well, I don't want to pay that price. I still have to run a business. And so I have to make sure that I'm getting fully compensated for not only my expertise, but my employees that are working on the projects, me working on the projects, time, energy, resources, all that sort of stuff. And so it's no different than with your organization. If you are undercutting yourself, you're only causing your organization more harm financially because you're trying to fit your organization financially into their box when that might not be it. And so if you understand, okay, well, this is how much it's going to cost to actually run this program, again, you can use that as strategic information to say, okay, well, this funding agency is going to give me $500,000, but I still need an additional $700,000. So where can I get this other $700,000? Do I need to do fundraising? Do I need to, do something, right? There's a lot of different ways that you can cover those costs. But then also identify, well, is this a grant that we should be supporting to begin with because it's costing us so much? And from a financial perspective, it just doesn't make sense. And so all of these tools are used to not only make sure that you're made whole, but also more importantly, to understand what is your true cost of service so that you can be most optimal and strategic as it pertains to fully carrying out all of your services as an organization, which should be also ran as a business, if that makes sense.
Yeah, no, that's a really great point, and I appreciate it. A good question here is the miscellaneous or contingency cost considered as part of indirect costs that should be negotiated for with the funder?
I would need more information in terms of what miscellaneous and contingency costs are. I don't understand that fully.
No worries. I think maybe this question is a little too maybe too specific for a very specific case, or maybe a little too general. But I will say that there are so many different variations and mutations on approaching this. And a lot of that has to do with the fact that there's almost no standardization in terms of this process throughout the space. So one thing to just be aware of is that as you are out there looking for grants, and I know I just said this a bunch of other times, but read the RFP, because even within one agency, it can be different. And they will outline and really help you understand what's eligible. And sometimes it may require you reading through the CFR and understanding like what they are referencing there. And that is where it is frequently super nice to have the help of a consultant who knows the space and is deeply aware of like how certain agencies interpret certain things. But all of that to say that I wish there was a very, a better answer, but really it's like, it depends. Oftentimes that's the answer to these questions. Like, it depends. I don't know.
Exactly. And if whoever is asking that question, if you want to clarify, then, I'm happy to answer that.
Yes, definitely feel free to drop another question or additional info into the Q&A, and we can try to respond to that. I'm going to hop through a few of these that I think are a little more focused on open grants generally. But I'll do a little lightning round through here, and then if anyone has additional questions about this space, preparing cost allocation plans, anything like that, please do drop them into the Q&A. But I'll address some of this stuff up here. So some questions about grant funding on open grants. We regularly pull funding from all over the United States. We don't generally list grants from international regions, but we do have a lot of info about like US funding to other parts of the world. So with the Pro account, you can save searches for sure and get automatic emails about opportunities. A question about grants actually getting, I'm not actually sure what this question is. Is there a grant writing that actually gets funded, or is so not entirely sure. If you want to follow up and throw another question, please do. We did an analysis of our indirect costs. Our development coordinator determined that costs for various admin in our budget, and then our accountant came up with a cost per client served. I'm not sure if that's a question or if there's a question in there. So Aleisha, I don't know if you had, is that a question, like from your lens?
The cost per business admin, et cetera, in our budget, and the other accountant came up with a cost per client served. Yeah, I mean, that's a good approach in terms of how you are identifying your indirect costs. There's a whole bunch of different ways that you could, there's no cookie cutter way to establish this. So whatever analysis that you're doing internally to be able to identify where your indirect costs are, there are best practices in terms of how to best calculate this. But every organization is different. It just depends.
It just depends. That is the thing that I repeat more often than not. So where can I get help with grant searches? I mean, there's a ton of resources. There are a ton of resources. Open Grants is great, grants.gov. California's grants.gov. Your local small business development center can help you with certain types of grants. And your local procurement technical assistance center can help you with certain kinds of grants. So there are free, paid, and everything in between services to help you with grant search. We are happy to point you in the direction of many of those. If you go to opengrants.io and hit up our support team. We'll also include resources and links in a follow-up email to this session. A great question about pro bono or free business tools for veterans. There are a lot of them. However, one of the things that the government sometimes struggles to do is communicate and advertise services for a variety of reasons, not necessarily their fault. Yeah, happy to just say that we do work closely with a variety of services, and there are a variety of tools from the federal government to support veterans. We regularly get folks access to that kind of thing. I don't know if Aleisha, if you have any specific services that you offer in that space, but that's go to opengrants.io, hit us up, and we'll be happy to help. Let's see. Thank you, Dean. I want to just touch on, I guess, one other thing here, which is that this whole process. We talk a lot about government grants. We've touched a bit on foundation grants as well. But I think one of the things that is an incredible opportunity here is just the fact that or something to take away, is that there are a lot of experts in this space who can take you from like 0 to 10 when it comes to navigating all of these nuances. And so as folks who are working within the government, as folks who are working outside, I know that we often, as just people in general, struggle with the idea of like paying someone versus, we balance that in our minds a lot of like, do we pay someone, do we not? And I've said it many times in these discussions that this is one of those things that makes sense to at least have a discussion with somebody, have some discovery, and get set off in the right direction. Because I'm sure, Aleisha, you are like booked solid. Like I'm sure you've got like, more work than you can deal with. And generally speaking, that's like everyone that I talk to in this space is like, yeah, we have like, we have more work than we can handle. But we are always interested in having conversations, in particular because this is something, at least for me, that I'm passionate about. I know that it's something that you're passionate about. It's just like, hey, look, you could be doing so much more, and it's just right there. So highly encourage you all to reach out and make connections. If there are any other questions, feel free to drop those in the Q&A. But I'll turn it over to you, Aleisha, if you have any like closing thoughts or perspectives that you want to share, words of advice or encouragement for those listening on the webinar today.
Yeah, absolutely. So I definitely, first, I just want to say thank you all for attending today. I hope that you guys got a lot of valuable information as it pertains to your grant portfolio and how you might be able to best leverage the regulations to your benefit and to your organization's benefit, in turn that you can impact more lives within your communities in whatever regard it is that you do that. And so I am offering a free grant assessment, so grant portfolio assessment. So you can go to my website, AleishaBeckum.com. It's just my name right here, .com. And you can schedule the free grant portfolio assessment, and I can assess your grant portfolio to identify, one, do you have what's your potential recovery for indirect costs on your grants? And then also can identify some strategic perspectives in terms of how you can best move forward with your grants, your overall grant portfolio, and any other questions that you might have as it pertains to the regulations. So I love educating. I'm very passionate about making sure that the information that I have up here, I feel like it's my duty and my responsibility to ensure that that gets disseminated out among everyone else, because like Sedale was mentioning earlier, there is a lot of education in this space, and I highly encourage everyone to become at least a little bit more knowledgeable about it, so you can be most successful in your organization.
Awesome. Well, thank you so much. And for those listening, we will at OpenGrants be sending out not only the recording, but also links to all these great resources as well. So if you didn't catch anything, please just keep an eye out for that email. Aleisha, thank you so much for coming on to discuss this with us and to share your insights into this space. It's massively valuable, just as a kind of a takeaway for folks. If you didn't hear, again, folks are leaving upwards of tens, 20s, hundreds of millions of dollars on the table by not understanding and failing to leverage these kinds of strategies. So as you look at your grant portfolio, please do dive in, reach out to Aleisha, take advantage. Sounds like an awesome deal. Get like someone to look at what you're doing and tell you how much more money you could have access to. So definitely keep an eye out for those emails. Really appreciate y'all for coming. You can pop in to OpenGrants anytime. And I saw a couple of so thank you all for being here, for sticking with us, and tune in next month. But thanks everyone. We'll see you around.